Fusion Mobile, quality e-learning experience on the go.
You are welcome to Fusion Mobile e-learning platform. I'm Olukobi Pelumi by name, the commerce teacher or the commerce teacher. So in this class, we'll be teaching the central bank and specialized financial institutions and other specialized financial institutions of specialized bank. So now we'll be looking at the meaning of bank, central bank. We'll be looking at the function of the central bank, how central bank controls the commercial bank. We'll be looking at banking clearinghouse, and also we'll be looking at specialized banks or financial institutions. And the first thing we have here is the central bank. The central bank is the highest financial institution in the country, responsible for what? Monetary policy of the government. So the highest financial institution in the country is referred to as central bank, and they are responsible for control of supply of money, that is the monetary policy in the country, and also regulating the supply of money and the demand of money in the economy. That is one of the functions of the central bank. So that's what the central bank has to do in a country. So it is the highest financial institution. That is why they are referred to as the apex bank. So they are responsible for what? For controlling and regulating the monetary policy of the government. Now the next thing we have on the line is the function of the central bank. The function of the central bank. So we have the function as those bankers to the government, serve as bankers to the government. So number 2 is responsible for the issuance and control of currency. The central bank also is the bankers bank. That is the bankers to all other commercial banks or to all other banks, and also is the lender of last resort. Lender of last resort, and again is also responsible for the formation. Responsible for the formation of rules and regulations in the banking industry. So it's responsible for the formation of rules and regulation in the banking industry. And number 6 is that the central bank is responsible for the monetary policy. So it's responsible for the monetary policy of the economy, and also the central bank is also having a function also that is responsible for the monetary policy of the economy. So it's responsible for the foreign exchange transaction. So we are going to look at the function of the central bank in this heading. So we have the bankers of the government. So the central bank is responsible for the banking aspect of the government. So the central bank collects revenue and also make payments on behalf of the government. So collect revenues on behalf of the government, they receive revenue on behalf of the government, and also make payments on behalf of the government. So they serve as bankers to the government. They will say they are the bank to the country, they are the bankers to the government. So that means they are the bank in which the government serve as the highest bank in the economy. And again, the central bank is also responsible for the issuance of currency and control of currency. So they are the one that have the right to print currency of the country. So there are any other bank that have the right to print the currency of the economy or of the country. So it's the central bank that have the control and right to issue currency in the economy. Now the next one we have is the bankers bank. So the central bank is also the bank to all other banks. So as the commercial bank is the bank for the public, for the general public, the central bank also serves as banks to all other commercial banks. That means all other commercial banks have some records with the central bank, and central bank assists them in terms of need also. So it is the responsibility of all central bank, of all commercial banks, to maintain the accounts with the central bank. Now the next one we have is the lender of last resort. The lender of last resort. If the banking industry is in serious financial crisis and financial difficulties, so it is the responsibility of the central bank to solve such financial crisis. So the central bank is usually the lender of last resort. So it lends to the commercial bank when the financial institution or when the banking industry is in serious financial difficulties and financial crisis. So it means any of the problem which the commercial bank is having, what happens? They go back to the commercial bank because the commercial bank serve as the lender of last resort. So next one we also having is the formulation of rules and regulation in the banking industry. So the commercial bank is responsible for formulation. So the central bank rather is responsible for formulation of laws, rules, and regulation that guards all of the aspects of the banking industries and all the banking of a commercial bank. So it's formed laws, it formed rules and regulation of the financial institution in the economy. Sorry, for the financial institution in the economy, it's formulated all of laws, all rules and regulations as guiding or as regards to the banking industry in the economy. So the next one we have is the central bank is responsible for monetary policy of the government and of the economy. So all of the monetary policy of the economy is maintained by the central bank. The central bank maintains the monetary policy of the economy. That's one of the functions of the central bank. Now the next thing we have is the foreign exchange transaction. Wow, all of the foreign exchange transaction of the government is maintained by by the central bank. So it buys and sells foreign exchange transaction, like foreign currency on behalf of the government. It trades the currency of its of its country, that is of Nigeria, with all other international markets, and also ensure that the country maintain a fixed that the currency that the part of the currency of the economy is maintaining a very stable value in order not to affect the generality of the economy. So it is the responsibility of the central bank to maintain its foreign exchange transaction, to carry out foreign exchange transaction on behalf of the government. So it trades in the foreign market and with all other currency of the country with its own currencies. So the next thing we have now is to look at how the central bank controls the commercial bank, since central bank serve as bank to all other commercial banks. So how do they control all other commercial banks? So the central bank controls all other commercial banks in the following ways: by looking at using the open market operation, using the bank rate, and also they can also control the activities of the commercial bank using the liquidity ratio, or cash ratio. So the activities of the commercial bank can also be controlled using special directives, and also the other activities can also be controlled using the special deposits. So number 6, the commercial bank can also control the activities by using by the use of moral persuasion. So these are the ways the central bank can control the activities of the commercial bank. So we have number 1, you have the open market operation, we have the bank rate, we have the liquidity ratio, we have the cash ratio, we also have the special directive, we have the special deposits, we have the moral persuasion. Now the first thing is the open market operation, which is OMO. So the open market operation represents the buying and the selling of government securities in the open market in order to control the money supply in the economy. So if the government is to control the money supply in the economy, what will the government do? Government use all of these monetary policies instruments to control and regulate the money supply in the economy. So the central bank will going to use all of this to control the money supply in the economy by using this monetary policy instruments, whereby is for whether to expand or restrict the money supply in the economy. The first one is the OMO, and which is the open market operation, and that refers to as well selling and buying of government security in the open market. So if the government is to expand the money supply in the economy, what will the government do? The government is going to sell security into the what? That is government is going to buy security from the open market. So and that increase what? That increase money supply in the economy. And if the government is to restrict money supply in the economy, what happens? The government is going to sell security in the open market, and money supply in the economy will be reduced. The next one we have is the bank rate. The bank rate. So I think the bank rate is the minimal rate charges by central bank on the commercial bank. So it's minimal rate in which the commercial bank was kept with the central bank in order to maintain their deposits, and it will be to maintain their maintain their discounted bill. So it is the rate in which the central bank charges the commercial bank for discounting the bill of exchange of the commercial bank. So if there's an increase in the rate, that means the money supply has been reduced or has been restricted, and if there's a reduction in the rate, that means the supply of money has been increased, or there is an expansion in the supply of money. So this is the minimal rate, usually in percentage, that is charged by the commercial bank, but that is charged by the central bank on the commercial bank on the discounted bill of the commercial bank. Next one we have is the liquidity ratio or cash ratio. Now this the ratio which represents the amounts in which the central bank the commercial bank is required to keep with the central bank. That is usually mandated by the government. That is, the commercial bank usually mandated by the government to keep a required amount of their deposits, some required amount that which might be in a fixed percentage with the central bank, in other words, to avoid any form of banking crisis in the future. So all of the total deposits of the commercial bank is usually required to keep some certain proportion with the central bank. So they are required by law to keep some certain proportion of their deposits with the central bank, and that proportion can be determined by the liquidity ratio or cash ratio. And if this proportion, an increase in this proportion or percentage, what will happen? We affect the money supply in the economy. So if there's an increase in the proportion of cash ratio in which the commercial bank is required to keep with the central bank, what will happen? The money supply in the economy will be affected. An increase in the ratio will really affect the money supply adversely. That means the money supply in the economy will be reduced. And also, if there's a reduction in the cash ratio, what will happen? The money supply in the economy will be increased. Now, the next thing we have now is special directives. So, when talking about the special directive, the central bank can give some aspects of this directive or laws to this commercial bank to direct their lending abilities to some aspect of industries. So when the central bank sees that this particular industry is not working well, what happens? The commercial bank can usually gives the directives to this commercial bank on their lending abilities and on their lending rights. So central bank also have the rights to give special directives to the commercial bank on their lending abilities. So that also serves as the ways in which the central bank can control the commercial bank. Now the next thing we have is special deposits. So out of the total deposits of the commercial bank, as stated earlier, the commercial bank is required to keep some certain proportion, some special deposits also, apart from the liquidity ratios. What happen? So that also serves as a way in disputing the money supply of the commercial bank, or in controlling the commercial bank. So the commercial bank are actually are required to keep some minimum deposits, some minimum amount, some special deposits with the central bank, and that affects the ability of the commercial bank to take credit, and also serve as a control on the power of the commercial bank. So the next thing we have is moral persuasion. So when using the moral persuasion to control the commercial bank, the central bank uses this in form of a plea or in form of what? Persuading the commercial bank to direct their lending abilities to some particular industries in order to expand the industries. So what happened? The central bank did not use any form of directives here, but what happened? They used some form of moral persuasion, or they used some form of pleading, they used some form of advice was in directing the commercial bank. So they only use directives, they only use some power or laws or any form of directive, but they are going to use some form of moral persuasion in ensuring that the commercial bank is able to direct their lending abilities to some industry and able to carry out some function in the economy. So these are the way in which the central bank can control the activities of the commercial bank. So next we'll be looking at the banking clearinghouse. We will look at the type of clearinghouse in the country. Thereafter we'll move to specialized banks or financial institutions. So the next thing is for us to look at the differences between the commercial bank and the central bank. So difference, you can look at the commercial bank and the central bank. Generally, the commercial bank is usually formed for profit making. So the central bank is not for profit making. So the commercial bank accepts deposits. So the central bank does not accept deposits, not accepts deposits. So does not accept deposits actually. Does not accept deposits. So number 3 is that the commercial bank is actually established from incorporation as Companies Acts, while commercial central bank is actually from Act of Parliament, through Acts of Parliament. Is established through the Act of Parliament. So number 4 is that this issue currencies and this does not issue currencies. And this is bank to the public, and this is bank to the government and the commercial bank itself. So these have the responsibility and also the commercial bank does not have the responsibility of monetary policy. Not responsible for monetary policy. So responsible for monetary policy. So let's stop here because of space. So we have a lot of differences between the commercial bank and the central bank. These are the few differences we can usually talk about now. So you can decide to know more of the differences. Now the next thing we have in line is bank clearing house. The bank clearing house. Very interesting. So we're going to look at different types of bank clearing house also. So what is the bank clearing house? The bank clearing house. This is usually formed by different banks. Like it's usually formed by various banks. This is the usually formed by various banks in order to clear or settle check drawn on one another. So it is formed So this is when different banks come together, different commercial banks come together and forms the clearing houses in order to clear or settle check drawn on one another. So they are actually be able to clear some check and drawn on one another. So when there's a check drawn on one bank with another bank, what will happen? There must be some aspect of clearing houses in order to clear and settle the check drawn on one another. So the next thing we can look at the types of clearing houses. Types of clearing house. We have the local clearing house. We have head office clearing house, and we have the bankers clearing house. Now the first thing we have is the local clearing house. Interestingly, the local clearing house. So the local clearing house is the clearing houses for various banks to clear check drawn on one another within the same local or the same locality or in the same town. So this form of clearing houses is really made available to clear to clear check drawn on various banks in the same town. So check are settled and cleared on one another. Check that has been cleared that has been drawn on one another are being settled and cleared among various banks in the same towns. So that is the function of the local clearing houses. So at the head office clearing houses, this usually ensure that bank that check drawn on one bank by another is being settled and is being cleared by various branches of the bank in the country, or in the particular city. So we call this head office clearing houses because it serves as end office. Now the banker clearing houses, these have an ultimate settlement or clearing of checks in the country. So it gives the ultimate clearing of all checks of all checks in the country. So this the ultimate places in which all of the check drawn on one banks and another is being checked, is being cleared and settled in the country. So we refer to such clearing houses as banker clearing houses. So the next thing we have is the specialized banks or financial institutions. We have other specialized banks like development banks, like merchant banks, like mortgage banks. So we are going to look at such banks now. So now we'll be looking at the specialized banks of financial institutions, and the specialized banks we'll be looking at are the development banks, the merchant bank, and the mortgage banks. So now we're going to start with the development bank. So the development banks are one of the specialized financial institutions that provide long-time loan for capital projects, to give long-time loans to individuals or firms for capital projects. So this type of specialized financial institutions usually assist firms or individuals who require loans to be able to carry capital development or capital project. So the major function of the development bank is the provision of funds for capital projects, which is one of the definition, which is the major purpose of the development bank. So and they develop manpower development by giving loans to individuals to be able to carry out its project, and also they supervise development projects. So if they provide them, they are going to see that the project is being developed, and also they render special advice. They give special advice to those that actually need the advice, and those actually counts for loan for capital project, and also implements government policies. So they helps in the implementations of government policies. So these are the function of the development banks. Now the next thing is to look at the merchant bank. The merchant bank is also one of the forms of specialized financial institutions that perform these following functions: that is the issuers of the issue of shares. They also give long-time and medium-time loans. They also discount the bills on behalf of their customers. This form of banks are usually in form of acceptance houses or discount houses. So they perform varieties of functions like discounting of bill of exchange, issuers of check, and also providing short-time and long-time loans to its customer. So we can look at the function of the merchant bank. The function of the merchant bank includes discounts of bill of exchange, the discount bill of exchange for their customer. They give loans to foreign traders, so they assist foreign traders by giving them loans. The advice was they serve as advisors to companies. Yes, they advise companies, and they also provide long-time loans and also make provision for corporate management services in form of management of portfolios of a company or of an individual. So they advise on the management of portfolios, like portfolio management and services. Now the next thing is the mortgage banks. This type of bank is usually formed to give us long-time loan in the development or in capital project, especially in building. So loan is usually given to those that are in need of loan for building purposes. So, and that is the major purpose of mortgage bank is to develop the habit of building houses by the people. So they increase the number of ownership of landed properties and houses in the country. That's the major purpose of mortgage banks. And mortgage bank includes the function of mortgage banks includes acceptance of deposits from their customers. They help to accumulate the deposits. They collect the deposits from their customers and accumulate such deposits for building purposes. And also they provide long-time loan, provision of long-time loan. They give advice on housing matters. Yes, they give advice to their customers as regards to housing, and also provision of houses. They provide houses for their customers, and also they development of mortgage institutions. They help in development of different mortgage institutions in the economy. So this has been an interesting class also. If you look at the meaning of central bank, the function of the central bank, how the central bank controls the commercial bank. We look at the banking clearing houses, where we talk about the local clearing houses. They talk about the head office clearing houses, and also the bankers clearing houses, which is the ultimate clearing houses of all check issued in the countries, drawn on all banks in the country. So we also talk about we talk about the specialized banks like development banks, mortgage bank, and merchant banks. Now, if you are having any questions as regard or confusion with this topic, please do not hesitate to replay the video. And again, some questions will be displayed on your screen. Do well to attend to such questions. Thank you.